Is the soft landing scenario in jeopardy? Let's ask Evercore's Roger Altman, the former Deputy U.S. Treasury Secretary. It's good to have you on. Welcome back.
Hey, Scott, how are you?
How would you answer that question? Are we suddenly need to rethink this whole thing?
Well, first of all, I'm not going to try to imitate Arnold in my answer. But no, I don't think we need to rethink it. But I think, as so often happens with markets, the narrative got ahead of itself. And by that, I mean there was a degree of price to perfection, which, as is usually the case, was overdone. And if you think about it, the narrative had developed completely unlike 6 to 9 months ago when it was the opposite, that growth is strong, labor markets are solid, inflation has sufficiently cooled, markets are at an all-time high, and the job is done. And that level of perfection almost never happens in the real world. Mm-hmm. And so I don't think yesterday's inflation uptick or a higher than expected number derails that whole scenario. I just think it puts a degree of reality into it. And why would the Fed take any risk of a premature easing? Well, they wouldn't. And as Powell said on 60 Minutes a couple of months ago, or a couple of weeks ago, the data has to be good before the Fed to make that profound move toward ease. So, no, I don't think the good scenario is derailed. It was just never going to be as perfect as the narrative had developed to be.
Was yesterday just a clear-cut sign of how reliant, so to speak, the market actually is on rate cuts? Or is that in and of itself an overreaction? Because some would make the argument that we don't need rate cuts at all. And because the economy is so good, that is more important than when the Fed first cuts.
Well, let me step back a minute. I think a really fascinating aspect of this era we're in is the degree to which the conventional wisdom turns out to be wrong. And this example of too much perfection in the expectation is one example. But if you think of even bigger ones, 6 to 9 months ago, at least half the world in finance and economics thought we were going to have a recession. And at minimum, 2024 would be a very weak year on growth. Now we're seeing not only did we have an amazing fourth quarter, but the current Atlanta Fed growth tracker, I think, is 2.5 to 3 for the current quarter, are completely different than what was thought just a few months ago. Think about China. 3 years ago, unstoppable colossus. Today, demographic collapse, poor outlook, and so forth. Both of those were exaggerated. It was never an unstoppable colossus, and it's not now a situation whose good days are completely behind them or over. And we just see example after example of that. By the way, I'm not blaming anybody, but U.S. intelligence, Russia will take Kyiv in 4 days. Not really. So we just live in an era where the world seems to want nice and easy and very clear narratives, when in reality, it's not really that way.
Yeah, you make good points. Great context and insight. Roger, thank you. We'll see you soon. Roger Altman.